Look, I'm gonna be honest with you. Trying to find an altcoin in this down market right now is almost as hard as trying to gauge if Russia's gonna actually attack Ukraine. Okay, it's that hard, but I've been practicing.
Let's do this.
Enemy UAV overhead.
I'm prepared. But yeah, in this video, I found one. I found an altcoin. Didn't want to hurt myself there. I found an altcoin that could potentially do well even in today's market conditions. Okay, I could see a lot of people are losing attention in this space because pretty much no altcoin is doing well. But this one specifically is so innovative. It's so innovative that it can do very, very well. It can increase by large percentages and change some people's lives. And just to be clear, I am going to invest and or provide liquidity to this platform to receive this coin. No ifs, ands, or buts. And I'm going to be doing it with a large percentage of my portfolio. Keep watching. What's going on, everybody? Alex back with another video. And today we're going to be talking about an altcoin with actual true innovation in a layer one blockchain that I like. I'm sure you guys have heard of it. It's called Solidly. I'm going to go over everything. They just came out with their exchange. I guess you could say they're a sneak preview launch. And I'm going to dive deep into exactly how it's going to work and why it's so innovative. If you appreciate this content, like the video, subscribe to the channel, and of course, share it with a friend. Guys, also, I say this every single time, but I'll say it again. There's basically a little bell at the bottom of the video. If you click that bell, you will get notified for my videos first. Now, there's also a YouTube app on your phone where you could turn on the notifications and then you'll get notified about my videos because, I don't know, you could potentially make money, even though this is not financial advice. Now, the way I'm going to structure this video is very clear. People are always like, Alex, you never talked about the altcoin you're going to talk about. I'm going to talk about the altcoin towards the end of the video. Towards the end of the video, we're going to go into it because there's not much to talk about. There's really not a lot of information, but I'll dissect it the way I always do and show you guys what I'm thinking. But the majority of this video is going to try to gauge what's going on in the macroeconomic environment, as well as inflation, Bitcoin, all the Russia tensions, and, all the news that I think is relevant in the cryptocurrency space that will obviously, mean a lot for this altcoin going up or not, right? I'm pretty sure, I'll get this altcoin regardless, but if we go in, to a bear market, Bitcoin drops to 40K or whatever the case is, I highly doubt this altcoin would do well. So we have to gauge exactly what's going on. Now, one of the biggest topics of discussion in the macroeconomic environment in the United States is the flat yield curve. So basically, there's two different types of yield or bonds that you can purchase to get yield in the United States. And the first one is a 2-year bond. And then the second one is a 10-year. Okay, so obviously, if you're investing in a 10-year, you should be able to get better returns because it's a longer term investment, and then 2 years should be less. So what's happening right now is there's a flat. The curve is flattening, and this is a sign of recession/depression. It's been a sign since the beginning of when it started. The whole point is when a short and long term bonds offer equivalent yield, there is usually little benefit in holding a longer term instrument. The investor does not gain any excess compensation for the risk associated with holding long-term securities. If the yield curve is flattened, it indicates the yield spread between long and short-term bonds is decreasing. For example, a flat yield curve on U.S. Treasury bonds is one in which the yield on a 2-year bond is 5%, a yield on a 30-year bond is 5.1%. So if we look at what's going on here, we have a 2-year bond that's at 1.59%, as you can see here, and then we have the 10-year, which is only at 1.981. Now, it's not obviously as close as the example, but we're getting closer and closer. And this has been a common train of thought for a lot of big macro investors. People have been talking about this, and I wanted to point your attention to it. The flatter it gets, the worse it will become. And it looks like people are obviously not looking to forward to the future, if that makes sense. If we look at West Texas oil, which is basically an indicator for the cost of oil, you can see in the last 73 days, it's gone up 40%. It's very, very expensive to buy oil in today's day and age. And the reason for it is because Russia is one of the exporters of oil. You get a lot of oil from Russia. And not only just Russia in Ukraine, but in other parts of the world. There's all types of trade issues right now, stemming from obviously economic conditions and in the pandemic and stuff like that. So yeah, oil is just a commodity that's showing clear signs of insecurity because the price is increasing substantially. Also, if we look at the US dollar currency index, you can see that it's going on a rise, meaning people are holding more US dollar, meaning people are probably getting out of things like risk on assets, and Bitcoin is showing a little bit of resilience. It's showing a little bit of resilience. You can see it kind of popped up since the Super Bowl or whatever the case is. But everybody was calling for, Bitcoin to rally substantially after the Super Bowl. We didn't see that. If anything, it dropped in price or stayed sideways. We had all the FTX commercials. We had, Coinbase with their cool commercial. All of this news and media did not pump Bitcoin. So my personal prediction is that if anything, they're using people as exit liquidity. So be very careful. If we look at inflation, we can see that high inflation is rapidly eroding U.S. wages. U.S. real average weekly earnings is at literally negative 3.1%. And as you can see, weekly wages is on a down spiral. So in general, inflation is destroying people's wages. They can't get as many items as they used to be able to get, which is a byproduct of diluting the monetary supply. If we look over here, you can see that GDP growth is looking bad too. Economists continue to downgrade this year's U.S. GDP growth forecast as they push inflation projections higher. Okay, and you can see that inflation. You guys get the point. Everybody's pretty much saying it all over the world. But if we look at a new Atlanta Fed inflation measure, the CPI less food and energy in U.S. hit an all-time high of 19% year over year. And I think it's really important because the CPI is a BS measure of inflation, in my personal opinion. It's like this headline, number that everybody looks at. But at the end of the day, there's so many different things that are happening that's contributing to the dilution of people's savings or, earnings or wage earnings, right? So in general, I just don't have a positive outlook for the United States economy. And this is probably why we have a lot of issues happening and potential wars and external conflict happening because, everybody wants to talk about the story of Ukraine and, Russia. And that's cool and all. And, I can comment on it. But I really think there's a war on money right now. I really think that's the biggest war that's happening right now. They're definitely going to make things happen, and cause conflict so they can use their second biggest power, which is the military. All right. If we come over here, the ratio of supply addresses under 100 BTC continue to drop. What does that mean? Whales are accumulating more BTC. This is obviously bullish for Bitcoin in the long term. And I will always be bullish on Bitcoin, especially if hyperinflation happens. I'm going all in. I'm betting the house. I'm betting my girlfriend. I'm betting everything. Okay. So I'm just kidding. I'm definitely a degen at heart, but I am trying to play it safe so I can pay people's payroll. If we come over here, you can see that mainstream companies are hiring for cryptocurrency job, which is a very, very big industry. You can see NFL, Nike, Hulu, Visa, Meta, Apple, Nvidia, Disney, PayPal, Google, Fidelity, Amazon, Microsoft, JP Morgan. I mean, I can keep going, but in general, we have all of these companies continuing to hire. And even if there is a quote unquote bear run, they will continue to hire. So if you're looking to get hired in a cryptocurrency company, well, it might be really, really smart to invest in your education. And we might be doing services like that in the future. I don't want to hint too much, but head on over to the fundamentalsecrets.com. It's going to be in the pinned comment below where we educate people, and we're looking to give them certifications for certain things like getting hired. If we come over here, I do want to point this out because we haven't looked at it in a long time. Public companies that own Bitcoin are pretty substantial. MicroStrategy, Tesla. We see this kind of FOMO effect with public companies as well as big countries, and it's really crazy that Tesla, MicroStrategy has not sold their cryptocurrency yet. And I think this is going to be one of the biggest catalysts for sure. And we always talk about it, but I just wanted to point it out one more time because the Super Bowl had some pretty interesting commercials and they spent a lot of money to do that. And pretty much every single commercial was talking about metaverse NFTs, trying to capture that trend. So yeah, we could definitely see big corporatocracies and big corporations push the price of Bitcoin up. Okay, if we look over here, Bitcoin HODL army growth, e-liquid supply. Again, adding to the again, adding to the long-term case of Bitcoin. You can see that in general, the amount of Bitcoin that's coming out in circulation versus the illiquid supply is basically decreasing, okay, the amount of Bitcoin that's moving around. It's very simple. More people are hodling Bitcoin over a long period of time, and this is what they call illiquid supply. We can have potential situations where there's a supply shock, okay, where people can't get their hands on Bitcoin and the price goes parabolic. It happens every single cycle. So long term, I'm extremely bullish on Bitcoin, and I've told you guys that 1,000 times. Also, I wanted to show you guys this ridiculous chart. I don't know if it's true. I don't know, who put this together. I was actually looking for some sources. Nobody really provides context, but obviously they're trying to go viral. And you can see that it's called the Bitcoin stock to FOMO hyperbolic model. It's predicting Bitcoin, 100 billion by 2030. I highly doubt it, and I think it's very unlikely. But it's really interesting to see that people are trying to put together these different types of models to predict the price of Bitcoin, as well as I think like people really try to capture the narrative. As you can see, it looks like scientific. It looks like somebody did something. But yeah, I don't know. I'm not that bullish. I'm not that bullish. I can't sit here and say Bitcoin's going to $100 billion, but I wanted to point that out. And if you guys want me to dive deeper into this chart to see exactly what they're talking about, the exponential inverse hyperbolic tangent model, and who's backing this up. Look, I like to find scientific peer-reviewed, charts and stuff like that. This just looks like some guy randomly shilling this. And a couple people were asking me, and this is why I'm pointing it out. I won't take this seriously. Not right now. Okay. Another news, we see the total hash rate in Bitcoin is reaching an all-time high. This is really good. And I think this is interesting that it's happening right now where we have, economic turmoil and all of these issues in Russia. I think it's very interesting that the security of Bitcoin is at its all-time high exactly at the time when all of these things are happening. Remember, guys, it's peer-to-peer technology, and the higher this hash rate is, the harder it's to take down. So if they go and attack all the Bitcoin nodes for whatever reason, this hash rate would contribute to the security, and they cannot take down Bitcoin. I think it's interesting. And then obviously I wanted to point out the Russia tensions. They're just like beefing over the internet at this point. It looks like Drake and Meek Mill fighting or something like that, because nothing's happening. US says Russia may create a pretext to attack Ukraine. So obviously, they have issues. I don't want to even go into it, to be honest. But in general, they're going back and forth on if he should attack Ukraine or not. America is always stepping in and butting their way into situations for whatever reason, whether it's the story of Russia and Ukraine or it's just because they want their dollar to increase in value. They are always in there somehow, some way. So yeah, in general, that's happening. Be careful. Stock up on, food, guns, et cetera, et cetera. I do think the price of food is going to go up. It's already gone up. It's already gone up. So if you want to buy bulk, like from Sam's Club or these big like bulk areas, I highly recommend it. Get canned goods, things like this, because if there was a war, it's gonna put a lot of strain on the economic system, and things can have big issues. Also, I do want to point this out that Ukraine is a big exporter of all of these different goods, including wheat, coal, copper, silver, nickel, gas, oil, right? So in general, if there is a war, these things are probably going to go up in price. And again, look at it. Wheat. Okay. So just pay attention. Things are happening. In other news, I see a big CryptoPunk right before the Super Bowl, selling for $24 million. This is a huge record, by the way. Two things that I think about when I see this is, number one, why is somebody selling this punk? Are they scared of what's going to go down? Or number two, maybe they're selling it to themselves in some way, shape, or form and trying to get some hype around the NFT cycle, because they always do that. And they did it like literally right before the Super Bowl. And it just happened to be that everyone in the Super Bowl was talking about NFTs and metaverse. So maybe they're trying to create some hype around the NFT industry. This is more likely, in my personal opinion. I don't think anybody would sell a $24 million NFT. If you own a $24 million NFT, you're likely already rich. So you wouldn't, like, what does he need this ETH for? I don't know. I think, again, it's more like just getting that headline big number is probably what they're doing right there. And if we look at the Super Bowl, there was pretty much everybody and their mom talking about cryptocurrency. Basically, it was the Super Bowl of cryptocurrency. Like, it was all about just crypto. We had a Coinbase commercial. We had an FTX commercial. We had an eToro commercial. We had a Salesforce commercial that said metaverse in the commercial. Like, what is going on? Buzzwords, marketing. Why are they all pushing for NFTs? Well, in my personal opinion, they're pushing for NFTs and crypto exchanges. NFTs, number one, obviously is doing well right now, even in this slight downturn of the market. So they can cash out on making some money, whatever the case is. It's huge, like hype cycle in NFTs right now. So that's always going to happen. And it's like fun, and it's not like financial related, so it's easier to market. And then the second thing I've noticed is that they're pushing for only exchanges, right? They're pushing for exchanges. That's scary to me because they could potentially use retail as exit liquidity, similar to how they've used, retail as exit liquidity every single time, every single cycle top. And what I basically mean by that is that when big whales with billions of dollars buy Bitcoin, they could buy it through OTC desks, and what that basically means is they use bots to buy it and not push up the price. So they'll find a whole bunch of low liquidity depth order books, and they'll use bots to buy the Bitcoin, and the price of Bitcoin will not pump when they buy it. But it's kind of the opposite thing when they dump it, right? So what they want is they want a whole bunch of people buying in so they can sell their cryptocurrency and try to dump the market. So again, more users on exchanges equals more retail making stupid decisions. Retail making stupid decisions leads to whales and big manipulators taking advantage of that, or AKA exit liquidity. So just be very careful with what's going on. I am not extremely bullish right now. I'm waiting for the side trend give me a confirmation. Are we going to move to the upside? If so, I'm going to buy. If we move to the downside, if so, I'm going to short and then buy at the bottom. I'm always going to buy in dollar cost average. It just depends on when I'm going to buy. Also, right now, I'm not really stressing because I have liquidity positions and stable coins, and I also have bots that have been trading the sideways, price action of Bitcoin that's been making me substantial amounts of money. It's not as good as like a 100x altcoin, but to make 4% in like 10 days is absolutely ridiculous with this trading bot. So if you want to get access to all of these bot setups, everything I'm doing, all of my trades, guys, hit the link below. Hit the link below in the pinned comment. Take advantage. We're also doing a trial, so you don't even have to buy the full thing. You could just try it out, go set up your bots, and then cancel the payment. I don't care. I am so confident in what I do in our product that I really don't care if people take advantage of me at this point. Last thing, let's go into the final part of this video, which you guys have all been waiting for. Let's talk about this altcoin and exactly what's going on. This altcoin's on the Fantom ecosystem. I've talked about it before. Fantom just crossed 2 million wallet addresses. Congratulations. Back in 2017. ETH crossed it, and then 11x in 8 months. So this could be potentially good for Fantom. Also, Fantom TVL is pretty much on a downtrend right now, and I do see it moving up when this exchange is launched. Why? Because the exchange is a decentralized exchange that literally will attract liquidity because of its new innovative technology. And this is the actual coin, which is called Solidly. So Solidly is basically a platform or a decentralized exchange, and we can actually see what it looks like here. Switch to Fantom mainnet. And this is on Fantom Opera. If you don't know how to use Fantom, I have a whole bunch of tutorials you guys could check out on the YouTube channel, so make sure to subscribe. But as you can see here, it's just a regular exchange. But the difference is if we come over here, they found a way to get these kind of serious benefits. Like, for example, you can natively support swaps between uncorrelated assets. I think the biggest one that they have is we come over here to MetaMask, like in a regular, let's switch over to the Ethereum mainnet. If we come over just to Ethereum mainnet here, I want to show you there's this thing called slippage, right? The slippage is really annoying, and I don't want to like do it right now, but I just want to show you an example. You can see that there's no slippage because there's a lot of liquidity in this pool. This is the ETH DAI pool, but if you pick like an altcoin that has like, maybe a $10 million market cap or something like that, there's a huge slippage issue, meaning when you buy the coin or you sell the coin, you are actually moving the price because of how small the liquidity pool is. So what they have done to innovate on this is they've found an incentive model to give more rewards to low liquidity depth, high volume pools, right? So what basically that means is, again, if we have, let's say, for example, and I see this for a lot of meme coins because I see it all the time. Let's say we have a new meme coin that just came out and a lot of people want to buy it, but there's not a lot of liquidity. What Solidly could do is they can actually aim the rewards of Solidly towards this pool so that it will attract more LP. And liquidity providers will want to go to this meme coin because there's more rewards being generated at this pool, okay? And then when that happens, then it gives it a cheaper price for the actual user, which is the person making the swaps, which is a net positive for the world because the exchange is giving a better rate to the actual customer, which is the person making the swap, right? So again, the beauty of this is that if there's a high volume liquidity pool, so there's a lot of trades happening with low liquidity depth, it incentivizes LPs to provide liquidity the right way, and they get those fees. So pretty much everybody wins. So this is a really cool model that they just put into place. Again, it's going to be very, very cheap. to make transactions, as what they say. It's going to have zero to no slippage. It's made by Andre Cornier, which he basically started the Fantom market, in my personal opinion. He's like one of the biggest leaders in DeFi tech, and he basically brought all the TVL, in my personal opinion. They're doing this huge launch, and it's happening. Just to be clear, I believe the way you get the tokens is going to be through liquidity providing, but you can see that the launch is happening on the 17th. So the emissions, yeah, so exactly what I was saying. The emissions start the 17th. If you want to, I'm going to provide liquidity to get some of these emissions and get the coins. So I will give you guys a complete tutorial when that happens. But I am super excited for this project. I'm super excited for the Fantom ecosystem, and I would not be surprised if Fantom, as well as this project, do pretty well, even in the sideways volatility of Bitcoin's price and all the uncertainties in the world, et cetera, et cetera. But yeah, pay attention to what's going on. That's pretty much it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.